What's up, guys? How you doing?
Sup, people? Happy
Mulondo.
Friday.
You look like
$1 million.
Beyonce, not Beyonce.
Wow. Wow.
Beyonce.
But you know there's a Beyonce.
Auntie,
In
there's
this
a
country.
in this country, yeah.
Yeah. Yeah.
I envy your husband.
Wow. I should have known that this is where we are going. I should have known it.
Envy him a lot. Ladies and gentlemen, joining us today on the show. You are, by the way, Susan, you are like the third person?
Yeah.
Joining you,
Yeah,
right?
that.
You're the third person in this car.
Oh.
Yeah, so
So you're welcome.
Lucky number 3.
Wesuneko.
Wow.
Hook
Actually,
you
let
up.
us know in the comment section who we should bring.
Yes.
Yeah.
But today, you know that we are all about money. Fe wali sente fe.
You will find us there.
Like the young people say, we shall power the body. Tuja kuiwa wo mubiri. So today, we've brought Sue from Prudential. Yeah. We go Prudential. Together to live a taboo. That's the song. That's the song. So today we brought Susan. Susan, please introduce your full name and your correct title at Prudential.
Suzanne Nyakato Kasente Kahindi.
Hey, I like the name
the name.
Kasente.
I like
You know the
it.
name
When
is
I
like-
come here together.
Really in the money. I'm the agent training manager. I basically deal with all the guys these guys meet who are selling to. Yeah, I do the training for them.
Wabla, you
for
can
that
train
specific-
them. They don't stop calling. They don't stop.
I hope they're receiving this feedback. Well done, guys.
They don't
Yeah.
stop.
In the bank, you know.
There's another account. Did you know of another account? You're like Banange agent.
Proud of them right now. Proud of them. Proud of them. So basically, yeah, the products that they sell, make sure that they understand them. So basically, yeah, that's what I do with the teams.
First, tell us about the products that Prudential offers.
Prudential generally offers, we do health, we do life. So I'm on the life end. So we provide, financial protection. We package it for everyone's different needs. Right now, what we have really huge on the market is the investment one. So we're trying to, bring a competitive product to give people options to save with a side of protection.
But you have two similar investment products. What's the difference that they offer to your clients?
Well, you see, there are two different needs. There's we have the option for whole life. So you take this and it's like for the whole of your life. Basically, you're taking care of the other generations to come, not you. And then we have the one with a term, like a period of time where you can take it for. So, if you want a limited time, you take that one. It's Investor Plan. Then if you want for the whole of your life, we have Investor Plus. So those are the two products we have under the investment, depending on what you need.
What? So when you say whole life, what you mean? Someone's going to pay until they die?
Well, yeah. But we do make it, friendly because, we don't expect you to be earning money until you die. So when we say whole life, we give you a period. You decide at what age you want to stop paying. Okay? But the protection, that cover, it stays for the whole of your life. Even when you've stopped paying, we wait until you die. So that's what we mean by taking care of the next, So that's whole life.
Oh, so this one is not like the accidents and death, by accident, death by. This one is when the time.
When time comes.
When the time has arrived.
Yes.
That your God calls you home. You can say, I left an inheritance for my children and my children's children.
I couldn't have said that better.
No.
Exactly that.
Nice. But this car thing that has a plan. You know the problem that many people have with insurance companies generally. And I don't know if Prudential does it. You guys, now you can stress us. We miss one payment thing. Yeah, sir, we are going to lose your money.
You're going to lose your money. All of it.
Excuse me. I've just been saving. I just forgot. Economy. Eganye. What is that like? Do you give an allowance? What's the maximum allowance? When can my money be refunded or taken? Stuff like that.
So basically what those agents are doing, they're trying to create the sense of urgency in you to make you want to pay. I mean, when they tell you're going to lose your money, you will want to pay.
Yeah.
But, you know, on the back end, the other bit that they will explain to you, people run out of money sometimes. As in, let's be honest, sometimes you're broke, you have other issues that are more important than paying for it right now. So what we do provide, we do give is a grace period, like a period where we allow your premiums to remain unpaid, but but we give you time, we allow you time. We give you up to 6 months, and we still offer you the protection, like you said, if you died, if something happened to you, we would still pay like you've been paying us, to give you the window to recover. So then they are making sure you don't reach that period when you've gone out of that window, where if you die, you're not under that car umbrella anymore. That's the urgency they need to create, but they create it immediately, not when it's too late.
So what you're trying to say is that actually the pressure is for my good.
Yes.
Got you. Now, you know, sometimes, I mean, we have to ask for our people. Sometimes you can be there and you are broke. Nanga, you know, there's some company there at Prudential.
There's some money.
You have some company. That's the one when they call you, they're asking. You say, I have some company. You know, it's at Prudential. How often can someone access their investment money? And how will that affect how their policy will run?
So the beauty of the Pro-Investor Plus and the Pro-Investor Plan is it's a two-part product. It has the protection and it has the investment.
Yeah.
Now, protection, I will just forget that one, it's not yours. You're paying for protection, it's not yours. Now, the investment though, you can pick any time. You've put your money
the protection one, you leave it alone.
That one you must keep your protection in place. You don't know when the rain is coming.
That's true.
So you keep it there. But on the investment, you can pick any time. When you've had it for 10 months, you have an emergency, email. We agree on how you want the payment made.
Yeah.
Within 5 working days, your bank account is smiling.
5 working days.
Within 5
You
working
can
days.
say that in 5 I'll have my money.
Standard.
The investor money. So when I'm saving, so when I'm sending my premium,
Yeah.
there's a portion that is for investment and there's a portion that is for protection.
Fantastic. You tell us at the beginning. So if you say you're paying like 1 ma, you tell us what percentage you want to go to protection
And what percentage I want to go to investment.
Yeah.
That's so cool.
Yeah.
Because most people only do protection and then you have no like you can't pick out your money, right?
And this money is on the principal.
This money it's a percentage. Yeah.
So you give me the percentage, but you keep the principal.
No, what you do when you give us 1 million, when it's coming in like so, you've told us 20% go to protection, 80% go to investment. So that 80% is that if you have done 1 month, it's 800k. So every month you're putting 800. You withdraw from withdraw from that one. The 200k is you leave it.
The 200k don't touch it.
Yeah.
And how much is the interest? Kubanga kati olaba fesu fetubala. Omuntu agamba kati wenteka 15%, 20. Okay.
So currently the interest it's 10% annual. And it's compounded interest. Yeah.
And it's compounded.
It's compounded.
Compounded interest
Interest and
is
simple
the
interest.
best interest.
First explain what compounded is, because some of us went to Twaja Tulimbuzi. Please explain, but we want to invest. What is compound interest?
So compounded, it accumulates. So say year 1, let me just illustrate. So say year 1 you've paid your month 1, let's use months. You've paid your 800,000. Okay? So we add interest to it at the end of the month, right? So the next month, it's not that it's 800 and 800, no. It's 800 plus your interest, and then we add interest on that total amount.
Have you understood?
So if you got 10%, say for example, on the 8,
you've
on
gone
the
far. You've gone far.
If, for example, we are counting 800,000, tukola chibalo kati. Chibalo on 800,000, how much money?
Say for I'm just illustration wise, so imagine on that 800,000, your interest for that month was 10k. Next, at
now
the end
you have
of
how much?
810,000
shillings in month 1.
Month 1. So month 2, you will add your other 800k,
and it will become 1,610,000.
Then we add interest to that.
Then you add the interest to the
1,610,000. When it's not compounding, your 10,000 is not included on the interest.
Then it becomes simple interest.
It becomes simple interest.
So we should refuse simple interest.
Yeah, we don't have it as we do compounded.
But there are people who do simple interest.
But there are other people.
Yeah, other people.
But not us.
But not Prudential.
Not us.
So it's like you give me interest even on my
On your
new
interest,
deposit.
yes.
On my interest.
Because let me tell you, Mr. Mulondo, the other day I realized we've been investing in treasury bills and bonds, but they are not in treasury, in shares. Me and you, Mr. Mulondo, we've been eating that interest because the interest has been we. You know, yeah, because we are one. So when the money was sent on my account,
Susan.
I ate it for
Susan.
us.
But now
I ate it for us.
I'm on her side. I'm on her side.
Let's
Because the share money, the interest was sent to us, not the premium. Now, as we didn't know, when they told us we needed tomatoes, we got the money from the bank account. Okay. Kumbe, we didn't know that we are eating our interest. In fact, that's what Pastor B calls eating your children. You've gone, you've given birth, no mulia. Baby, no mulia. That's what they call it.
Right.
Because you've made interest, and because you have access to it, you've chonged it.
Right.
But now what Prudential is saying is that that interest, we also invest it so that your investment makes an investment. That's what they call money working for you.
Oh my goodness.
That's how it works.
My wife.
These things excite me. Money. But you see, Auntie, because we are a family. So you tell us, how do I extend this protection to my family? Or can I even extend it to my family? Because these things of where you only protect Brian, it's a problem.
And so
because Nange wind.
We've entered also the age where we have to take care of our parents. You know, things are, this is the age.
So these two products, I'll give you, I'll say two things. There's generational wealth, building generational wealth, and then family continuity. That's how you extend it to your family. You see, especially our Pro Investor Plus, the whole life one, you're building money over time. Remember that money that is not yours? It even after
interest.
you stop, the entire bulk lump sum of money. It keeps,
the one that's for your family. Okay.
So it keeps accumulating and accumulating. So at the point where you die, this is what they receive. So over, say, the 40 years you've been alive, right? After you started it. 80 years, sorry. 40 plus, I'm assuming you started it at 40.
You started
the 40 years
the
you've
40,
been.
now you are 80. Okay, you're 100.
So all that money you've been accumulating. You remember in school when you go and say, Batange, those ones, their parents were rich because their parents were rich. Generational wealth. So you can actually use that product to build generational wealth. That's how you extend it to your family. So they are financially stable even after. So you guarantee their family continuity after you die. So all the bills, you know, people forget. When you die, you forget there is still rent, power, water, for you to eat.
Katidero, if you live two families.
Don't even talk about it.
If you live two families, now they come quarreling at Prudential offices. Wife 1 and wife 2.
Wow.
muchiyiya mutya.
No, Custard, you have made the arrangements. It's at the very least.
You should have made the arrangements.
You know, you it's quite fascinating. You've talked about the compounded interest. Apart from that, what are the other things that Prudential offers on these products that are not with that the other people in the market are not doing?
Okay, so this let me relate it like to like banks, because really that's really out of our purview, but we're still a financial institution. So when you put your money in the bank, when you put your 10 million, 40 million in the bank, and you're planning to do like 100 million over a period of time, if you put your 10 million today and something happened to you, the bank would give you your 10 million, your family would come and pick the 10 million with charges, right?
Oh yes.
And that's it, ballpoint, right? But if you put your money in
that same millions.
Now, yes, you put the 10 million in our Pro Investor Plus, for example, and then you've only put your 10 million and then something happens to you. It will be your 10 million plus the interest. That's fine. But remember the protection arm?
Yeah.
You, at the beginning, we guarantee your amount. Now, for example, you said you're doing this for the next 40 years. 40 not of age, 40 of saving money.
Yes, yes.
So, and you passed on after just 6 months, and something happened to you. But we said in the 40 years we are guaranteeing you, like say 70 million. We would pay you on top of your 10 million, 70 million, which you have not given us, but would guarantee and pay you out
because
70
that's
million.
The protection.
Exactly.
Anyway. That's how insurance works.
Exactly. So if you're putting it in the bank, you'd go with your 9 point something, right?
Yeah.
But if you put it in our products,
you would go with 80 million.
Over 80 million. So
yet you had not even put in 10 million. You are just starting 6 months.
Yeah. These days there are different places people put their money to build it up, right? There's unit trust, treasury bills, treasury bonds. There's so many options available to them. So what these things don't offer is protection. You put your money, and if anything happens to you, you go back to what you've put there and the interest alone. So what Pro Investor products do is they do give you the option to do the investment. It's competitive, of course. If you're looking at the money angle, it's competitive.
Yeah.
But of course there's better, you get, eh?
Yeah.
But what we offer that they don't offer, none of them offer, is protection. And you can't beat that because it is guaranteed protection.
Yeah.
Yeah. So I mean, that's one thing we have over and above. And if you look at the other products on the market, it is really something a lot of people need right now.
So now we know that there is protection. Is there a minimum amount? You know how people, when we now you come with your 10K, will they just ask from Prudential? Is it 100K? Are there what are those? What are the what are the terms and conditions?
Now, if you've had, I'll answer that in around. If you've talked to any, if you've talked to any of our agents, when you ask them what's the minimum, they'll always ask you. It depends. Their answer will always be depends on what you want. Okay. You see, if you're looking at building an investment, they'll ask you what are you investing to do.
Yeah.
Now, if you say you want family continuity, for example. They won't ask you, you want to base what the family needs based on the 10K. You have to ask real questions like, what do you want to help them with when you're not here anymore? I want to make sure these ones go to school. I want to make sure these bills are paid. Exactly. I want to make sure my parents,
they pay for their wedding.
Hey. You see, now when you say that,
my grandchild's wedding, yes, or my great-grandchild's wedding.
And you want to make sure, maybe you have the son, you want him to build a house, but you need to get, whatever you want. So you see, when you tell them that, that is how you come to your minimum. There's no, I mean, if I sit down and tell you 100K, what is 100K going to help you do? You'll do 100K after you find it's like 15, 16 million. But you have big dreams for your family. Let's be honest. If you got 15 million today, no other source of income, how long would your family last? Yeah. Bills paid, etc. So I would answer that with a question on what do you want it to do for you at the end of the day. So that is the basis of your minimum. that you need to pay. Because if I tell you 100K and it doesn't work, you'll say you sold to me badly.
Yeah.
But if I sell to you what you want, then I sell to you properly.
Based on what you want.
Based on what you want, which is where you
So
get
we
that.
come to you when we know exactly what we want.
Even if you don't know, part
And
of
you-
our
at
job
least
is
we can have a
re-advising.
conversation.
That's why they don't come and say it is this one, or that one. You sit and look at what's available.
You can tailor make something.
Yes.
Right.
Actually, literally, they tailor make it, because if you sit down, I'll say I can sit and talk to you, then I'll talk to her, and then you'll want the same thing, but you'll find you're paying different amounts.
Yeah.
Because you are like, this one I need to put in real money. While Ash is like, need to put in even more money. So if I just came and told you, okay, it's 500K, you'd be like, and
It's
then
not
what
the
will it
same
do?
for even. It's not the same even for everybody.
Exactly.
Like I can imagine a rich man living and a person who's just starting insurance. Like how does that work? Obviously, a rich man is going to put more.
Yes.
And the other guy is going to work towards. So is my premium like, is it standard, or can I keep increasing it? Like I started at 100,000.
Yeah.
Then as money started to come, the economy is doing really well.
Yeah.
I feel like I can reach now 1 million per month.
Every birthday of your
that.
plan. Not your birthday, the happy birthday of
the
that
plan. Whether
Ah.
the happy birthday of the plan.
The happy birthday of a plan, you can increase, but you can't decrease.
You can't decrease.
You can only go up. So when you
Hey,
go
I
up,
have to wait for the happy birthday of the plan.
to increase, but don't decrease.
Yeah, so you come there slowly.
Yeah, so don't come
Don't
violently.
come, you're excited. You've
You've
got one project.
You can prepay.
I can prepare.
Yes, if you
But
don't want to
You will
increase.
put it at the time of the birthday.
No, you can't.
No, the prepay means that when a time reaches, they'll just keep removing that
You can-
100K for you.
If you're not sure, you can increase your money,
Hey.
but you have hit a deal and you're not sure you'll hit it again. Prepay, so that you pay for you can pay like 10 months in advance. As the system will lock it in, and then we'll keep
We'll tabulate.
apportioning.
keep removing.
So your
That's
banja will come
clever.
later.
Because
Because
you're
you'll be
really clever.
Yeah,
Yeah,
because
that's
some
really
of us,
clever.
man, omuyindi asura golod. No chavyanga. That's all for the year.
Yeah.
That's so cool.
That's
Yeah.
cool.
You know what, Suzanne? We saw. I saw our billboards in Mbale. Big.
Oh, on
Right.
the stretch to the road, okay? Public
man,
street,
they
man, it
look
looks
so
good.
Ah, nange
Oh,
natuna
it looks
nengamba, is
good.
that me?
Yeah.
Oh my God.
Yes, on
You
public
look so
street you
good.
do. You really
And
do.
can see me.
Yes.
But where else is Prudential? Where can people find the agents?
The agents, our agents are everywhere.
Yeah.
They are phone call away. If you, we
They're even
do-
in the comment section.
If
If you write a
Facebook,
comment and say I need help,
Oh my dear.
someone will come
They'll
to the
jump on
comment
it.
section.
Yes.
Yes.
All you have to do is then whisper, Prudential, help me." If you break right now, 10 guys will jump at you.
In
I
fact,
guarantee
in fact,
that.
Mr. Mulondo, do you know that Sandra Jamugisa will jump on it?
Oh yeah.
Yes.
Yes. Those ones. Yeah.
We can pass in here, honey.
Prudential mutunda.
Eh,
That's for
Mutunda.
sure. That's for sure. You know what, Suzanne? We thank you for taking off your time. You know, guys, we are not just saying this because we are official brand ambassadors of Prudential. We are not just saying this. We are saying this because we also believe in it. We want to leave you with something that many people have been asking us about.
Yeah.
When they look at the advert, they're like, man, Mulondo, how did you guys turn 60 years? That is the idea. Don't wait until you're 60 to
Yeah.
start investing.
Yeah.
The guys are here, Prudential is here. You better not go anywhere. So let's leave you with this advert of the Mulondos. What would you do if you're at 60?
Yeah.
We are the Mulondos.
Yeah.
Yeah. We've been married 10 years.
No, I actually didn't think I would last 10 years.
I believe at 60 we will be able
Yeah.
to afford any healthcare that is needed because we had planned very well early. We had invested in the right things with the right people.
At this age, to be able to be healthy enough to enjoy your wealth
And like the old adage goes, your health
is your wealth.
Get a life and health insurance policy with Prudential and secure your health and financial future today.